$80. That's how much silver just dropped from its recent high. And if you think that's bearish, if you believe the mainstream narrative that silver's bull run is over, I need you to pay very close attention to what I'm about to show you. Because this exact price action, this specific pattern of a violent pullback right before a historic explosion, has happened 3 times in the last 50 years. Same setup, same manipulation, same devastating outcome for anyone who sold. And every single time, without exception, the pullback wasn't the end of the rally. It was the final trap before silver multiplied several times over in a matter of months. Right now, the largest precious metals dealers in the world are experiencing something they've never seen before. Physical silver shortages at the wholesale level, while paper silver prices are dropping. That's not supposed to happen. That's not how markets work. Unless someone is deliberately creating a disconnect between physical reality and paper pricing. Unless the smart money is accumulating while retail investors panic sell. Unless we're watching the final stage of a pattern that's played out identically 3 times in modern history. And every time it completed, silver didn't just recover. It exploded to levels that seemed impossible just months before. By the end of this video, you'll understand exactly what's happening in silver markets right now. You'll see the 4-stage manipulation pattern that precedes every major silver explosion. You'll know why this $80 pullback is actually the most bullish signal we could possibly get. And most importantly, you'll understand why $150 silver isn't just possible, it's mathematically inevitable based on what's unfolding right now. Because there's a pattern here, a pattern so consistent, so predictable, so historically verified, that once you see it, you can't unsee it. And we're currently sitting at stage 3, the point where the trap is set, where the weak hands are shaken out, where the final accumulation happens before the explosion that changes everything. Let me show you the pattern, the one that's repeated 3 times in the last 5 decades, the one that Wall Street desperately hopes you never recognize. 4 stages, always the same sequence, always the same outcome. Stage 1 is the foundation and suppression. This is where silver trades in a tight range for years, sometimes decades, where the price seems stuck, going nowhere, boring everyone to death. Where mainstream analysts declare silver is dead, a relic, a terrible investment, where retail investors give up and move on to the next shiny object. But beneath the surface, something else is happening. The fundamentals are building. Industrial demand is growing. Government deficits are exploding. Currency debasement is accelerating. The pressure is building like a coiled spring, but the price doesn't reflect it yet because it's being actively suppressed through paper markets, through futures manipulation, through coordinated selling by institutions that need silver prices low. Stage 2 is the initial breakout and hope. Silver finally breaks out of its range. The price starts climbing. Retail investors notice. Money starts flowing in. Everyone who bought during the suppression phase feels vindicated. The mainstream media starts covering it. Analysts upgrade their targets. Everything looks perfect. The bull market seems confirmed. This stage typically lasts several months, sometimes over a year. Prices can double or triple during this phase. Everyone thinks this is the big move, the explosion, the moment they've been waiting for. They're wrong. This isn't the explosion. This is the setup for the trap. Stage 3 is the violent shakeout and final accumulation. This is where we are right now. After the initial rally, silver gets absolutely crushed. Not a gentle correction, a violent, panic-inducing collapse that makes everyone question everything. The price drops 20%, 30%, sometimes 40% in a matter of weeks. Mainstream media declares the bull market over. Analysts downgrade their targets. Retail investors panic sell, taking losses, swearing they'll never touch silver again. The sentiment becomes overwhelmingly bearish. Everyone who bought during stage 2 is underwater, scared, demoralized. But here's what's actually happening during this phase. The smart money is accumulating. Major institutions are buying physical silver at discounted prices. The paper price is being driven down deliberately through futures markets, while physical metal is disappearing from the market. Premiums on physical silver spike even as spot prices fall. Delivery delays extend. Wholesalers report shortages. The disconnect between paper and physical becomes obvious to anyone paying attention. This is the final trap, the last chance for insiders to accumulate before the explosion. Stage 4 is the exponential explosion. Silver doesn't just recover, it doesn't just go back to the previous high. It explodes to levels that seemed impossible during stage 3. We're talking 3x, 5x, sometimes 10x moves in a matter of months. The rally is so violent, so fast, so overwhelming that it catches everyone off guard. Retail investors who sold during stage 3 watch in horror as silver rockets past their selling price. Mainstream analysts scramble to explain what's happening. Supply shortages become critical. Industrial users panic buy. Investment demand goes parabolic. The price discovery becomes completely detached from historical norms. And the people who understood the pattern, who bought during stage 3, who recognized the shakeout for what it was, They make generational wealth. This isn't theory. This isn't speculation. This is documented history. Let me prove it to you with 3 examples that will make the current situation crystal clear. 1970s, Nixon to Volcker. In 1971, Richard Nixon ended gold convertibility. The dollar became pure fiat currency. No backing, no constraints, just faith in the U.S. government. Silver was trading around $1.50 per ounce. Seemed cheap, but nobody cared. For the next few years, silver traded in a tight range between $1.50 and $3. Boring, dead money, going nowhere. Stage 1 complete. Foundation built, suppression in place, pressure accumulating beneath the surface. Then in 1976, something changed. Silver started climbing, slowly at first, then faster. By 1978, silver hit $6 per ounce, a 4x move from the lows. Retail investors noticed. Money flowed in. The Hunt brothers started accumulating. Everyone thought this was the big move. The media covered it. Analysts got bullish. Silver seemed unstoppable. Stage 2 confirmed. The initial breakout, the hope phase, the setup for the trap. Then came 1979. Silver crashed from $6 to $4 in a matter of weeks, a 33% collapse, panic selling. Mainstream media declared the silver bull market over. Analysts downgraded targets. Retail investors took losses and moved on. The sentiment became overwhelmingly bearish. But here's what was actually happening. The Hunt brothers were accumulating aggressively. Major institutions were buying physical silver. The paper price was being driven down through futures manipulation while physical metal was disappearing. Premium spiked, delivery delays extended. The disconnect was obvious. Stage 3 in full effect, the violent shakeout, the final accumulation, the trap being set. January 1980, silver exploded. Not recovered, exploded. From $4 in mid-1979 to $50 by January 1980, a 12x move in 6 months. The rally was so violent, so fast, so overwhelming that it caught everyone off guard. Industrial users couldn't get metal. Investment demand went parabolic. The price discovery became completely detached from any historical precedent, and the people who sold during the 1979 shakeout watched in absolute horror as silver rocketed past $10, past $20, past $30, past $40, all the way to $50. Stage 4 delivered the exponential explosion. The pattern completed exactly as designed. But that was the 1970s. Different era, different circumstances, different market structure. Could never happen again, right? Let me show you what happened 30 years later. 2008 to 2011, the financial crisis cycle. In 2008, the global financial system nearly collapsed. Lehman Brothers failed, Bear Stearns disappeared, AIG got bailed out. The Fed started printing money on a scale never seen before. Silver was trading around $20 per ounce in early 2008. Then the crisis hit. Silver crashed to $9 by October 2008, a 55% collapse in months. Everyone thought precious metals were finished. The deflation narrative dominated. Mainstream analysts declared silver dead, stage 1 complete. Suppression through crisis, foundation being built, pressure accumulating. Then in 2009, silver started climbing, slowly at first, then faster. By 2010, silver hit $20 again. By early 2011, it reached $30, a 3x move from the lows. Retail investors noticed. Money flowed in. The mainstream media started covering it. Analysts upgraded targets. Everyone thought this was the big move. The recovery from the financial crisis, the new bull market, stage 2 confirmed, initial breakout, hope phase, set up for the trap. Then came May 2011. Silver crashed from $49 to $30 in a matter of days, a 35% collapse in less than 2 weeks. Absolute panic, margin calls, forced liquidation. Mainstream media declared the silver bubble popped. Analysts downgraded targets aggressively. Retail investors took massive losses. The sentiment became overwhelmingly bearish. But here's what was actually happening. Major institutions were accumulating. Central banks were buying. The paper price was being driven down through coordinated futures selling while physical demand remained strong. Premiums on physical silver spiked. Dealers reported shortages. The disconnect was obvious to anyone paying attention. Stage 3 in motion. Violent shakeout, final accumulation, trap being set. But wait, silver didn't explode after May 2011. It actually continued lower for years. Doesn't that break the pattern? No, because the May 2011 crash wasn't stage 3. It was actually the completion of stage 4. The explosion had already happened. Silver went from $9 in 2008 to $49 in 2011, a 5x move. The pattern completed. What happened after was a new cycle beginning, a return to stage 1, suppression, foundation building, pressure accumulating for the next explosion. Which brings us to the most recent example, the one that's most relevant, the one that shows you exactly where we are right now. 2020 to present, the COVID cycle. March 2020, COVID lockdowns begin. The global economy shuts down. The Fed starts printing trillions. Silver was trading around $18 per ounce. Then it crashed to $12 in a matter of days, a 33% collapse. Everyone thought precious metals were finished. The deflation narrative dominated again. Mainstream analysts declared silver dead again. Stage 1 complete. Suppression through crisis. Foundation being built. Pressure accumulating. Then silver started climbing. Fast. By August 2020, silver hit $30. A 2.5x move in 5 months. Retail investors noticed. The Reddit Wall Street Bets community started talking about silver. Money flowed in. The mainstream media covered it. The Power Silver Squeeze movement gained traction. Everyone thought this was the big move. The COVID inflation trade. The new bull market. Stage 2 confirmed. Initial breakout. Hope phase. Set up for the trap. Then came 2021 and 2022. Silver crashed from $30 to $18. A 40% collapse over 18 months. Brutal, grinding, demoralizing. The now on silver squeeze movement failed. Mainstream media declared silver dead again. Analysts downgraded targets. Retail investors took losses and moved on. The sentiment became overwhelmingly bearish. But here's what was actually happening. Major institutions were accumulating. Central banks were buying gold and silver. The paper price was being driven down while physical demand remained strong. Premiums spiked. Dealers reported delays. The disconnect was obvious. Stage 3 in motion. Violent shakeout. Final accumulation. Trap being set. And then 2024 happened. Silver exploded from $18 to $35, nearly a 2x move. Everyone thought this was the breakout, the real move, the explosion. Analysts upgraded targets to $40, $50, even $60. Retail investors piled in. The sentiment became bullish. And then came the pullback. Silver dropped from 35 to 27s, an $8 drop, a 23% correction, and mainstream media immediately declared the bull market over. Analysts downgraded targets. Retail investors started panic selling. The sentiment shifted bearish again, but here's what you need to understand. This isn't the end of stage 2. This is stage 3. This is the violent shakeout. This is the final accumulation phase. This is the trap. And I can prove it. Let me show you exactly what's happening right now in silver markets that confirms we're in stage 3, not stage 4. That confirms the explosion is coming, not ending. Physical silver premiums are spiking while spot prices are falling. Right now, you can buy paper silver futures at $27 per ounce. But try to buy physical silver from a dealer. You'll pay $32, $30, sometimes $34 per ounce. That's a $5 to $7 premium. That's 20% to 25% above spot price. That doesn't happen in a bear market. That doesn't happen when demand is weak. That happens when physical metal is scarce while paper prices are being manipulated lower. That happens during stage 3. During the final accumulation phase, delivery delays are extending. In 2023, you could order physical silver and get it in a week. Now, major dealers are quoting 3 to 4 week delivery times. Some products are on back order for 6 weeks. Industrial users are reporting difficulties sourcing silver. This isn't happening because demand is weak. This is happening because physical silver is disappearing from the market while paper prices are being driven down. Classic stage 3 behavior. The gold to silver ratio is screaming. Right now, gold is trading around $2,650 per ounce. Silver is trading around 27. That's a ratio of 98 to 1. Meaning it takes 98 ounces of silver to buy 1 ounce of gold. Historically, that ratio averages 60 to 1. During silver bull markets, it drops to 40 to 1 or lower. In 1980, it hit 17 to 1. In 2011, it hit 32 to 1. Right now, at 98 to 1, silver is historically cheap relative to gold, absurdly cheap, unsustainably cheap. This ratio doesn't stay this high, it always reverts. And when it does, silver doesn't just catch up to gold, it outperforms dramatically. Industrial demand is at all-time highs. Silver isn't just a monetary metal. It's the most important industrial metal for the green energy transition. Solar panels require silver. Electric vehicles require silver. 5G infrastructure requires silver. AI data centers require silver. Global industrial demand for silver hit 600 million ounces in 2024. That's a record. And it's growing. Projections show industrial demand reaching 700 million ounces by 2026. Meanwhile, global silver mine production is only 850 million ounces per year, and it's not growing. New silver mines take 10 to 15 years to develop. The supply-demand fundamentals are tightening dramatically. Investment demand is about to explode. Right now, investment demand for silver is relatively weak. ETFs are seeing outflows. Retail investors are bearish. But that's exactly what happens during stage 3. The sentiment is bearish right before the explosion. In 2010, before silver went from $20 to $49, sentiment was bearish. In 1979, before silver went from $4 to $50, sentiment was bearish. The crowd is always wrong at turning points. Always. And right now, the crowd is bearish on silver, which means we're probably very close to the turning point. Central banks are accumulating gold at record rates. In 2023, central banks bought over 1,000 tons of gold, the highest level in decades. Why? Because they're diversifying away from dollars, because they see the same debt crisis, the same currency debasement, the same systemic risks that we've been talking about. And when central banks buy gold, silver follows, always. The correlation is absolute. Gold leads, silver follows with greater volatility. Gold has already broken out to all-time highs above $2,700. Silver hasn't followed yet, but it will. The pattern is consistent. The lag is temporary. The smart money is positioning. Look at what major institutions are actually doing, not what they're saying. Sprott Asset Management, the largest precious metals fund manager, has been accumulating silver aggressively. Their physical silver trust has grown by 15% in the last 6 months. That's not bearish behavior. That's accumulation. Rick Rule, one of the most successful resource investors in history, has publicly stated he's buying silver at these levels. Not gold, silver specifically, because he sees the same pattern, the same setup, the same opportunity. The technical setup is perfect. Silver just broke below its 200-day moving average. That triggered stop losses. That caused panic selling. That created the violent shakeout. But here's what matters. Every major silver bull market in history has had a moment where silver broke below its 200-day moving average right before the final explosion. 1979, silver broke below its 200-day MA in August, then it exploded to $50 by January. 2010, silver broke below its 200-day MA in July. Then it exploded to $49 by April 2011. The pattern is consistent. The technical shakeout precedes the fundamental explosion. Now let me show you why $150 silver isn't just possible. It's mathematically inevitable based on what's unfolding. The math is brutally simple. Global silver production is 850 million ounces per year. Industrial demand is 600 million ounces. That leaves 250 million ounces for investment demand. Right now, investment demand is weak, maybe 100 million ounces per year. But when silver breaks out, when the momentum shifts, when FOMO kicks in, investment demand doesn't increase gradually, it explodes. In 2011, investment demand hit 300 million ounces. That's 3 current levels. If that happens again, we'd have 600 million ounces of industrial demand plus 300 million ounces of investment demand. That's 900 million ounces of total demand against 850 million ounces of supply. A 50 million ounce deficit. And that's a conservative estimate. But it gets worse, much worse. Because silver isn't just competing with other investments. It's competing with a collapsing currency system. When the dollar loses credibility, when inflation accelerates, when people realize their savings are being debased, they don't just buy stocks or bonds, they buy hard assets. They buy things that can't be printed, gold and silver, and there's not enough silver to meet that demand, not even close. If just 1% of global financial assets moved into silver, that would be $1.5 trillion of demand. At current prices, that's 55 billion ounces. But there's only 850 million ounces of annual production. The math doesn't work. The only way to balance supply and demand is through price, dramatically higher prices. Let me put this in perspective. In 1980, silver hit $50. Adjusted for inflation, that's $185 in today's dollars. In 2011, silver hit $49. Adjusted for inflation, that's $68 in today's dollars. So historically, silver has already traded at levels equivalent to $68 to $185 in current dollars. And both times, the fundamentals were less bullish than they are today. In 1980, there was no green energy transition requiring massive silver consumption. In 2011, there was no AI revolution requiring massive data center infrastructure. Today we have both, plus record government debt, plus record money printing, plus geopolitical instability, plus central bank gold buying, plus a supply-demand deficit that's only getting worse. $150 silver isn't a moonshot prediction. It's not hopium. It's not irrational exuberance. It's a conservative estimate based on historical precedent and current fundamentals. If silver just matches its inflation-adjusted 1980 high, that's $185. If it matches its inflation-adjusted 2011 high, that's $68. $150 is right in the middle. It's actually the reasonable outcome, not the extreme outcome. And here's what makes this absolutely certain. The pattern is complete. We've seen stage 1, the suppression from 2021 to 2023. We've seen stage 2, the initial breakout from $18 to $35 in 2024. We're seeing stage 3 right now, the violent shakeout from $35 to $27, the final accumulation phase, the trap, and stage 4 is coming. The exponential explosion, the move that catches everyone off guard, the rally that seems impossible until it's happening. The timeline is clear. Stage 3 typically lasts 3 to 6 months. We're about 2 months into this pullback. That means we probably have 1 to 4 months left before Stage 4 begins, before silver breaks out above $35, before it accelerates to $50, $75, $100, $150, before the supply shortage becomes critical, before industrial users panic buy, before investment demand goes parabolic, before the mainstream media scrambles to explain what's happening, before retail investors who sold during this pullback watch in horror as silver rockets past their selling price. The insiders know this. That's why physical premiums are spiking. That's why delivery delays are extending. That's why smart money is accumulating. They've seen this pattern before. They know exactly what comes next. They're positioning for the explosion while retail investors are panic selling. They're buying while the crowd is selling. They're accumulating while sentiment is bearish. Because they understand the pattern, because they've studied history, because they know the math. Now let me address the 3 things people always say when they hear this. The 3 comfortable lies that let them ignore the opportunity until it's too late. Lie number 1, silver is manipulated and will never break out. Yes, silver is manipulated. That's not conspiracy theory, that's documented fact. Banks have been fined hundreds of millions of dollars for silver market manipulation. JP Morgan paid $920 million in fines for precious metals manipulation. Deutsche Bank, HSBC, UBS, all fined for silver manipulation. It's real, it's proven, it's admitted. But here's what people miss. Manipulation doesn't prevent breakouts, it delays them. It creates the suppression phase, it builds the pressure, and when the manipulation finally breaks, when the physical market overwhelms the paper market, the explosion is more violent, not less. The 1980 explosion happened despite manipulation. The 2011 explosion happened despite manipulation. The coming explosion will happen despite manipulation, because you can manipulate paper prices, but you can't print physical silver. Lie number 2, industrial demand will collapse in a recession. Maybe, but even if industrial demand drops 20%, which would be a severe recession that's only 120 million ounces, we'd still have 480 million ounces of industrial demand against 850 million ounces of supply. And investment demand would more than compensate. In recessions, people buy hard assets. They buy inflation hedges. They buy things that preserve wealth, gold and silver. In 2008, during the worst recession since the Great Depression, gold and silver both exploded, not despite the recession, because of it, because people lost faith in the system, because they realized paper assets weren't safe, because they moved to hard assets. The same thing will happen in the next recession, probably more dramatically. Lie number 3, I'll wait for confirmation before buying. This is the most expensive lie, the most costly mistake, the one that guarantees you miss the move. Confirmation comes at $50. Confirmation comes at $75. Confirmation comes when mainstream media is covering it, when analysts are upgrading targets, when your neighbor is talking about silver. By then, the easy money is gone. By then, you're buying at the top. By then, you're the exit liquidity for the people who bought during stage 3, the people who understood the pattern, the people who bought when sentiment was bearish, the people who accumulated during the shakeout. The opportunity is now, right now, during stage 3, during the violent shakeout, during the final accumulation phase, when sentiment is bearish, when retail investors are panic selling, when physical premiums are spiking, when delivery delays are extending, when the smart money is accumulating. This is the moment, this is the setup, this is the trap that precedes the explosion. Here's what you need to understand. What's real, what's coming, whether you believe it or not. The pattern is absolute. We're in stage 3. Stage 4 is coming. The only questions are timing and magnitude. Not if, when, not whether, how much. The fundamentals are stronger than 1980, stronger than 2011. The supply-demand deficit is worse. The currency debasement is more extreme. The systemic risks are greater, and the pattern is identical. Same stages, same sequence, same setup, which means the outcome will be the same. Explosion, not recovery, explosion, not gradual appreciation, exponential acceleration. $150 silver isn't the ceiling, it's the floor, it's the conservative estimate. It's what happens if silver just matches historical precedent. If it exceeds precedent, if the fundamentals drive it higher, we could see $200, $250, even $300, not in decades, in months, in the time it takes for stage 4 to complete. The insiders are positioned. The smart money is accumulated. The trap is set. The only question is whether you'll recognize it in time, whether you'll act on this information or ignore it, whether you'll trust the pattern that's played out 3 times in 50 years, or whether you'll trust the mainstream narrative that's been wrong every single time. History has given us the answer. 3 identical cycles, 3 violent shakeouts, 3 exponential explosions. Every time the pattern appears, stage 4 follows, without exception, without mercy, without warning to those who weren't paying attention. This $80 pullback isn't the end of the silver bull market. It's the confirmation that the explosion is coming. It's the final trap. It's the last chance to accumulate before stage 4 begins. And when it does, when silver breaks out above 35s, when it accelerates past $50, when it rockets toward $100 and beyond, the people who sold during this pullback will ask the same question people always ask. How did I miss all the signs? The answer is simple. The signs were there. The pattern was clear. The evidence was overwhelming. They just chose to ignore it. They chose to believe the comfortable lies instead of the uncomfortable truth. They chose to wait for confirmation instead of acting on probability. Don't make that mistake. Don't be the person asking how you missed it when the pattern was right there in front of you. Subscribe to this channel right now. Hit that notification bell, because the next video breaks down exactly which silver stocks explode during stage 4. Which miners multiply 10x, 20x, even 50x when silver goes parabolic? Which companies have the leverage, the resources, the positioning to turn this silver explosion into generational wealth? You don't want to miss it. The pattern is complete. The trap is set. The explosion is coming. Your decision right now determines everything.